Hi there, Joe Vitale from American Retirement Advisors with a weekly market update. Stocks, the markets around the world advanced on Friday after both Chinese and U.S. leaders said that their negotiators agreed to remove some of the additional tariffs in phases, signaling a potential trade truce could go beyond a freeze and new duties and increase global trade. So for the week, the S&P rose 0.93% to a new record. The Russell 2000 gained 1.37, the Nasdaq's up 1.11%. Now overseas developed market, the EFA's up 0.54, and emerging markets added 1.5% for the week. Financials and energy were the best performers last week, and utilities and real estate were lagging as well. So on fixed income, the yields are rising across the board on strong economic data, expectations of increased global trade and stock market gains, and rates on long-term maturities have increased significantly in the past 3 months. Last week, the 10-year Treasury rose 19 basis points to 1.94, which is the highest since July. And a month ago, the 10-year Treasury is at 1.54, which is up about 40 bips. The future market indicates that bets are off for more rate cuts with just a 50% chance of a rate increase at some point over the next year. Now, commodities, the price of gold, precious metals, and ETF endowment series holding declined 3.63% last week on expectations of increased global economic activity due to the anticipated U.S.-China trade agreement. Typically a safe haven asset, gold is up 13.31% year to date. In economic data, the weekly initial jobless claims of 211,000 were below the estimates at 8,000 drop from the prior week. Now, those already collecting unemployment benefits, their continual claims fell by 3,000 to the lowest level since the early 70s. And the pace of layoffs and the unemployment rate remain near a 50-year low, which has been encouraging for consumer confidence and spending. Now, in company news, the Walt Disney Company, a CoreSelect holding, reported revenues and earnings that exceeded expectations. Management detailed plans for its streaming services launch was well received by investors, and their shares rose 3.9% for the week. EOG Resources and Energy Holding reported higher oil production and lower operating expenses than they were planning, and their shares rose 5% for the week. Expedia, which is a G33 holding, disappointed with its quarterly results and its growth outlook. Their shares dropped 26.5% for the week, and this holding is currently under review. Malibu Boats, another G33 holding, revenues and earnings exceeded expectations on Wall Street, and their shares rose 17.1% last week. Virtusa is another G33 holding, reported a slight beat to expectations and indicated return to growth for its largest clients, and they're up 10.5% for the week. So if you have any questions on recent market news and how it affects your portfolio, or you'd like a second opinion on your portfolio and want us to take a look at it, give us a call at 855-756-5700. We want to wish all of our veterans a happy Veterans Day, and we're so thankful for you and our freedom, and God bless you. Thank you.